Welcome to ForexTV.com. It's Wednesday, March 12th. I'm Remy Hookie for your New York Forex Market Buzz. Eurodollar has hit another record high in today's session, earlier breaking past $1.55. In afternoon trade as of 1:17 p.m. Eastern Time, Eurodollar is at $1.5495. Sterling dollar is trading at $2.0215, while dollar yen is around $1.0226. U.S. equities are managing to stay in positive territory after seeing the biggest one-day gain in 5 years in yesterday's session. This surge came on the heels of the Fed's latest move to boost liquidity in coordination with other central banks. This afternoon, I'm joined by John Person, President of National Futures. Good afternoon, John.
Good afternoon, Remy. Thanks for having me.
Thank you for joining us on another volatile trading day. Well, so it appears that the Fed's measures that added to U.S. dollar strength yesterday, as well as the equity rally, have been somewhat short-lived. And during this shift in the global economic landscape that we're seeing right now, crude prices continue to top records. But in the FX market, let's start out with euro-dollar, with the pair breaching 155 today. John, first, are we at a turning point here fundamentally? And as we near the end of Q1, what is your outlook going forward?
Well, let's talk a bit about technical analysis, and I think this is something that may help people understand the magnitude of the kind of move that we've seen. The pace of price change in just 14 months since the beginning of, 07, we've seen the euro currency go from 130 up to 155 today. That certainly is on top of the move that we saw from 06 to 07, where we ended December of 2005, just to give people a gauge of where things have come from, around the 117.5 area. So, I mean, from 117 up to 155 in less than 23 months, or excuse me, in less than 27 months total, it is certainly a tremendous move against the U.S. dollar, particularly against a administration here in the U.S. that is firmly for a strong dollar. So obviously the strong dollar policy isn't working. From a technical standpoint, there's so many people saying, okay, where can this go? I'm actually taken a bit surprised by today's move, but from a technical perspective, tops and bottoms are made at the end of long trends with hyper-extensive moves. And I think that this is kind of the move that we're seeing right now. So I think from a time and a price perspective, we're coming close to, or we're very near the top for the short term here in the euro currency. Can I pick the exact price? Can I pick the exact minute that we're going to see that? No, I think that's hard. But those who were picking a top at 150, 500 pip move is certainly something that hurts, but not against the move that's seen that has taken us from 117 in the last 27 months up to 155. So 500 pip move in just a short period of time in the last 2 weeks, or 5 trading days actually, is something that's maybe a little too much too soon, and I think that's a good sign from a trader's perspective that we're seeing this heightened volatility at the end of a long trending move, and that's a surefire way of telling that there is a turnaround coming in this market soon.
Okay, John, adding to what you just said, and also adding to a brief conversation we had earlier about what we're seeing unfold not only in the currency markets but also equities and commodities. As you mentioned, there is plenty of volatility, but the direction of some moves have been severe. And before we take a look at more of the usual fundamentals and technicals for the majors, where are the best opportunities in FX right now?
Well, first off, I think that there is going to be some, obviously the word volatility, some people associate the word volatility, Remy, with the market having wild swings both up and down, left and right, no direction. It's just very whipsaw. There's lots of volatility. Volatility also means there's very fast moves at a very increased pace of price change, and we've seen that in a trending market condition here in the currencies. And I think that there gets to be a point where there's a term that we use, and it's called the market has departed from the means, and it's a mean reversion situation. In other words, the market has certainly come off a long-term trend a little too far too fast. We get into an overbought situation, and in some of the technical studies that I've done shows that up near 155 to 157 in this price range, the market would have departed too far from a proprietary or a longer-term moving average that I use. It's done that twice, and both times that it's done that to this magnitude, the market's had a significant correction. So I would say that the odds favor from between 155 to 157. That's a 200 pip move from here right now today. We could probably see a pullback to the magnitude of seeing the euro currency into the 142.5, 143 region within the next 6 weeks. So with that said, what opportunities are there? Obviously, spot Forex, if your 200 pip is your target area that you know that's the kind of risk that you might have to take if it's too aggressive for full lot size traders in the Forex arena for regular retail investors, potentially start looking at scaling down your lot size, or more importantly, scale down this, and shoot to a mini size Forex contract. The next opportunity I would say is there's other ways to skin a cat, so to speak, and taking advantage of this for equities traders. We have ETFs. The FXE is the symbol, and it has options on that, and that's something that I think that you want to get an option that would possibly expire no sooner than 37 days, and that would leave you with the April expiration out on the FXE. June options expire in 100 days, and I think that's a little too much, and you'd be paying too much time premium. So there is one other area that you can look at and explore, and that would also be the futures and the futures options. But I think for some traders, most people have stock accounts if they're trading Forex anyway, and it's one area to explore, looking at the FXE or look at mini lots on spot Forex accounts.
Okay, John, I'm sure our viewers will appreciate those tips. But I'd also like to take a look at the low-yielding currencies of the yen and the Swissy.
Sure.
While we keep our eyes on the central bank action globally, as well as the financial sector, the kind of risk aversion we have been seeing recently has been good for the yen and Swissy. So for the low yielders, which crosses as well as major pairs are you watching, and at what levels?
Well, I tell you what, here's one it's actually taken everyone by surprise to some degree, is the Japanese yen. As the yen is trading, just and closing in on that par level, we're at 102 at this area. I think the euro yen is one that, if we see, I think that the long-standing deflationary cycle that we've seen in Japan, I think that we're seeing some of that taken out. And I think that you could see the euro yen look at that cross to particularly, which that trade is trading at around 158.30 or so. We could easily see that market trade back down to around 156. I think here we have a situation where it's a low risk reward situation. 58.30 risking closes above 59.20, targeting approximately the 156 band one more time in the euro yen. So I think that when you look at other markets, the euro currency, not just taking a look at that as it relates to the U.S. dollar, but also other crosses, in particularly with the yen. So that was one that I would be paying attention to going forward.
Okay, John, as always, thank you very much for insight and analysis, and have a great afternoon.
Thanks, Remy, and good luck to everyone trading this week.
Thank you. This has been your Forex Market Buzz with John Person, President of National Futures. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.